Minutes from the Fed's December meeting indicates a higher upside risk to inflation, clouding the outlook on the Fed's rate cut trajectory. The stocks closed mixed as the Dow and the S&P 500 eke out gains, while the Nasdaq has closed with losses. Asian markets are trading largely lower following a volatile session on Wall Street. The gift nifty is also indicating a lower start for our own markets. Crude prices fall on a stronger dollar and rising U.S. crude inventory. Gold prices have risen to a 4-week high despite the Fed's caution on inflation. The earnings season kicks off today with TCS set to report its third quarter numbers later this evening. A muted quarter is expected on the back of seasonal furloughs and lower contributions from its key client, BSNL. And the Finance Ministry reshuffles key portfolios ahead of the Union Budget. Finance Secretary Tuhin Kanta Pandey has been given additional charge as Revenue Secretary. Arunish Chawla replaces Pandey as the DIPAM Secretary and will also hold the charge of the Department of Public Enterprises. Good morning, you're watching Power Breakfast on CNBC TV 18 on the penultimate day of this trading week. It's also the weekly expiry of the Nifty in the Mumbai News Centre. I am Hormas Fatakia. Let's first take a look at how the Asian markets have started off this morning. And it's a cautious start, if I can call it that, because the Hang Seng is absolutely flat. Pressure coming in from Japan. The indices were down yesterday. The indices are down today as well. 0.7% down on the Nikkei. The Taiwanese index is down 0.3%. The Shanghai Composite is down close to 0.5%. And the Kospi is trading just above the flat line. So a mixed picture emerging from the Asian markets this morning. And pull up the gift nifty as well, and that will give you an idea of how our own markets are likely to start off. Well, a 55-point downtick is what the implied open is currently suggesting. We recovered smartly from the lows yesterday. We'll get to that in just a bit, but for now the implied open is suggesting a slightly negative start for our own markets. But moving on to Wall Street then, where Wednesday's trading session was a mixed one, and it was pretty similar to what our session panned out during the day, because the indices there too recovered from the lows of the day. The Dow ended 100 points higher, at one point was down 200 points. The S&P 500 closed just above the flat line, and the Nasdaq, though, it did recover almost 200 points from the lows of the day, but ended below the flat line. Now, minutes released from the December's Fed meeting reflected that nearly all committee participants found that the upside risks to the inflation outlook have increased, and that is adding to the concerns from the investor community that there may be fewer rate cuts than expected this year. Now, CNBC's Steve Leisman has more on the Fed Minutes.
The Federal Reserve at its December meeting was at or near the point, after cutting by a quarter, of slowing its policy easing. The rate cut that they did enact was seen as, quote, finely balanced. It was a finely balanced call, and some wanted to not cut at all. That is more than just the one dissent. Not everybody has the vote. So why did the Fed cut? The minutes say that the Fed cut rates to maintain the strength of the economy and the labor market while continuing progress on inflation because they believed they were restrictive. The risk between inflation and unemployment were seen as roughly balanced. Inflation had eased substantially, though it remains somewhat elevated. What you're going to hear next is a lot of the back and forth at the meeting between those most concerned about inflation and those less concerned. So the pace of disinflation had slowed, some said, with recent readings higher than anticipated. Upside risk to inflation had increased. Several were concerned that disinflation may have stalled or risked stalling. On the other side, some people said disinflation was still apparent across the board, especially in market prices as opposed to the non-market prices on a range of goods and services. Now, moving on, the firms were seen as more reluctant to increase prices. Consumers were more price sensitive. Changes in trade and immigration policy. Now, a big discussion about coming fiscal policy here. It's mentioned several times in the minutes. Changes in trade and immigration policy could delay inflation improvement. The uncertainty of it also elevated the uncertainty out there about policy. There was a rising business optimism, however, and uncertainty reported from expectations for tax policy changes along with deregulation. Positive market sentiment and momentum in growth could put upward pressure on inflation, and the Fed was concerned about knowing the difference between what was a temporary increase in inflation, for example, from tariffs. They didn't use that example, but that's the implication, or from other forces in the economy that might be more permanent. So a period of uncertainty ahead, according to the Federal Reserve guys, and this is why they have telegraphed that they will be slowing the pace of easing in the coming year.
period of uncertainty ahead, according to the Fed officials. Staying with Wall Street, let us also listen into what Mohammad Al Arayan, the chief economic advisor of Allianz, has to say about the Fed and inflation going ahead.
The Fed has got to pivot away from this excessive data dependency and take a strategic view, and rather than fuel volatility, try to reduce volatility. And there's two issues the Fed has to navigate right now. One is monetary policy, and two is the political landscape.
Right.
And whenever we hear from the Fed, we have to remember they're navigating two different things, not just one. Inflation expectations are stable. We don't have an inflation problem. We have an inflation issue relative to a 2% target. You heard previously this notion of sticky inflation, sticky inflation, sticky inflation. That's actually stable inflation that doesn't disrupt the underlying economy.
Now, speaking on inflation, the U.S. Treasury Secretary Janet Yellen believes that the country is in a downward path and that the Fed will soon meet its 2% inflation target. Listen in.
We have seen really solid growth, and we did experience a surge in inflation. And most people who are alive now never lived through an episode like that. The rate of inflation has come way down. It's now pretty close, quite close to the Fed's target. So prices aren't continuing to rise at anything like that pace. It's now very close to normal. So the CPI inflation rate is just a little bit above 2%. Similarly, for the Fed's index that they watch, core inflation, excluding food and energy, is a little bit higher. And we haven't seen too much progress in the last couple of months, but I feel pretty convinced that we're on a downward path.
That's all we have on the global markets front, but how will all of these cues impact our own markets? Our research team joins in with the trade setup, the stocks that are likely to be in the news, and the FNO setup as well. You know, yesterday's session is something that the bulls will see some hope from, considering that we recovered after making an intraday low below the mark of 23,500. The Nifty recovered almost 200 points. The Nifty Bank recovered almost 450 points from the lows of the day. It also managed to close, but it's closed below that mark of 50,000. So that remains a point to watch out for. But the stocks that contributed, though, to that recovery were the index heavyweights, particularly Reliance Industries. After some positive brokerage commentary that came in, that stock held on to gains all through the session. Firstly, kept the downsides in check and then contributed to the recovery. It was ably supported by ITC and TCS ahead of its results as well today. But there was pain in the broader markets that saw no recovery in yesterday's session. Both the mid-cap and the small-cap indices ended with losses of 1% to 1.5%, and there was plenty of stock-specific action within the broader markets. A lot of these high-flying names saw profit booking. Dixon, Keynes, they were up 150% in 2024. Paytm too recovered from its lows, made a new high above 1,000 rupees. That saw some negative news flow coming in yesterday, so that took a bit of a beating. But these beaten down MFI names were on focus yesterday. Look at Spandana Spurti, Credit Access Grameen, even LTI Mindtree, one of the worst performing IT names of last year. That saw some more brokerage commentary coming in as well. So that stock ended higher. But today's session, 23,500 remains that key level to watch on the downside for the index. But that 200 DMA, though, even though we recovered from the lows, is still significantly away from that 200 DMA level. And that is important for the Nifty to cross for further upside. All eyes, of course, on TCS's results today. That may be a key determinant of how the IT sector reacts as a whole, and then, of course, on the index. And, of course, the non-farm payrolls data that will be reported on Friday globally. That will be a big global cue to watch out for. And, of course, today, the AMFI data that you need to watch out for. That will give you an idea of how the flows are panning out in our own markets. But for now, the GIFT Nifty is indicating a slightly negative start for our own markets. You see if we recover from those opening lows. Over to Abhishek now. List out the stocks you need to keep an eye out for today. Abhishek, good morning. What's on your list?
Good morning. So to begin with, BHAL, they have commissioned, their hydroelectric project in Bhutan. There are Q3 updates coming in. With respect to Tata Motors, JLR, the retail sales are down 3% YOY, while the wholesale sales are up 3% YOY. PM Gadgil Jewellers, they saw consolidation growth of 24% YOY, with retail at 44% growth, franchisee at 87% growth, e-commerce at 98% and diamond revenue growth of 40%. Now, Acme Solar Holdings have commissioned a capacity of 62 megawatt and 28 megawatt of solar power projects in Rajasthan. Anand Rathi Wealth, they will consider bonus shares to the shareholders on 13th of January 2025. Lupin, they have received an EIR from US FDA for their Pithampur Unit 1 manufacturing facility with voluntary action indicator classification. Manappuram is in focus. RBI has lifted the restriction on Ashirwad Microfinance as well as DMI Finance. So all four NBFCs which had restrictions from RBI have now seen the restrictions being lifted off, and Ashirwad is a subsidiary of Manappuram. NMDC, the board has approved incorporation of a wholly owned subsidiary and also opening of license offices at Dubai, UAE, Brisbane, that is in Australia. Z Media to consider fundraising on 13th of Jan. Back to you.
Abhishek, thanks a lot for that. And lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. Smart recovery from the lows yesterday, but what's the F&O data indicating?
Well, there was smart recovery indeed. If you look at the Nifty Bank, the mid-cap index as well. In the second half, in particular, it was led by all the heavyweights. We had Reliance, which was holding off one end through the day. And then in the second half, we had some buying coming in on ITC as well as TCS ahead of numbers today as well. But what's interesting is that, despite the sort of selling that we've seen on two occasions this week, we haven't gone below the 31st December low of 23,460. So that should give bulls some support and some hope as well. But what keeps bears also active is the fact that the Nifty over the last 5 trading sessions has been making lower highs. Jan 2, same time last week when we saw that big bazooka move on the Nifty, the high was 24,227, and from there on, every subsequent day, the high was only lower, with yesterday's high being around 23,751 itself. And the reason why the highs are lower is because, one, on the way up, the FIs are selling in cash market. Yesterday, too, that number increased to 3,400 crores. And yesterday, also, they sold a little more in index futures, close to around 1,350 crores. And this makes their short contracts around 19,000 added over the previous trading session, and net contracts at around 2.38 lakhs on the negative side, which is the highest that we've seen in this series itself, long proportion at 19% itself. Ahead of weekly options expiry, they've also written more calls than puts, telling you that maybe on the way up, they are expecting some congestion, which may be a fuel if the market was to move higher. What are the levels we're looking at? 23,700 call, fairly active, 23,650 put, equally active as well. So the broad range is 23,550 to 23,800. Were we to cross the 200-day moving average, we'll see a bigger move, a lot of short covering on the frontline indices. Just keep an eye out on L&T Finance. It has entered F&O band.
Indeed. Mangalam, thanks a lot for that update. 23,923, the level to watch on the Nifty. The time for a short break. Up next, earnings season begins and TCS will report numbers. Today, we get you the key expectations on the other side. Stay tuned. Welcome back, and the third quarter earnings season kicks off today with TCS expected to report a muted quarter. Post-market hours today, Reema is joining in with the expectations. Reema, good morning. How's the quarter likely to fare for the big boy?
Well, muted on account of two reasons. One, typically in Q3, you have fewer working days, there are furloughs at clients, and therefore generally business is subdued. And secondly, TCS's top-line growth was boosted for the last couple of quarters on account of this large BSNL deal. But the incremental contribution from BSNL is coming down, which means BSNL contributed more to their revenues in Q2 compared to Q3, and that's the reason why the top line for TCS could actually come down by 0.6% according to the CNBC TV 18 poll. Also on account of cross-currency headwinds. If you look at the constant currency revenue growth, it's expected to be on the flattish side. Margins for the company are likely to inch up to 24.5%. They've been declining for the last 2 quarters, so expect a bit of a recovery, and that will drive a profit jump of nearly 4%. What will the street watch? Well, the growth X of BSNL. Right? Because in the prior quarter, the international revenues, which is, X of India, X of BSNL, actually declined by 0.4%, weakest since COVID. So has there been a recovery there? Secondly, on continued recovery in BFSI. BFSI has been showing green shoots. Managements are talking up about the potential of BFSI in the recovery. So has that continued? And the third and the more important one will be US healthcare, because in the prior quarter, the company did face pressures. There were large deal cancellations, ramp downs from the clients' end. So healthcare came under pressure, healthcare and life sciences. So has that persisted or has that recovered? Now, the stock TCS has been a bit of an underperformer. In the last 1 year, TCS share price is up 8%. But if you compare it with CN Infosys, which has seen a growth of about 25%. The reason is Infy is likely to grow faster than TCS this year and next year. And that's the reason why Infy's valuations have also caught up to that of TCS. TCS share price, as I said, up 8% in the last 1 year, and it's down 12% from its recent highs. Back to you.
Rima, thanks a lot for that. All eyes, of course, on TCS. But moving on, the microfinance stocks were in focus yesterday ahead of the sectoral meeting with the Financial Services Secretary. Now, in the meeting, the MFIs conveyed that they are facing difficulties in raising low-cost term funds, and the quality of the portfolio is being impacted by various issues, including a reduction in lending to the sector. The industry requested the formulation of a credit guarantee scheme, a special fund for companies operating in the Northeast, and relaxations in qualifying asset norms. Now, the DFS Secretary has also emphasized that the microfinance institutions in India need to be more robust, vibrant and financially sound, and they need to draw a roadmap to strengthen the sector. Now, following the meeting, my colleague Sapna Das caught up with Gigi Mamin, who's the Executive Director and the CEO of Sadhan, to understand how critical the meeting with the DFS Secretary was. Listen in.
This was a meeting to discuss about the kind of issues being faced by the sector, microfinance sector, and the kind of request the microfinance sector has from the government, especially this time being very crucial prior to the preparation of the budget. So it was a timely kind of a meeting, I would say. So basically the requests were on funding part of it, because funding is a major challenge as far as microfinance institutions or microfinance sector is concerned. Getting a cost-free funding is very much important. That will bring down the ultimate pricing also. So having a dedicated funding, creating a dedicated funding mechanism, just like something created in National Housing Bank for the housing finance corporations. Similarly, can the government create dedicated funding for the microfinance institution? That was one thing we requested for. Another is that we requested that maybe a credit guarantee kind of a mechanism for the microfinance institution would also be useful, so that MFIs will be in a position to borrow from banks and development financial institutions.
Did you have this mechanism earlier?
Earlier we had a guarantee mechanism during the COVID period, but that was a temporary arrangement only for that COVID time. So maybe that can be extended as a regular feature, so that MFIs will be in a position to borrow more from the banks and DFIs. Third one is equity funding is also an important aspect as far as microfinance institutions are concerned, because if they have to grow, they need growth capital. So right now you don't have much avenues for investment. I mean,
Sourcing of money.
Equity fund. There is an IMEF created by Government of India long back, but that is still not underutilized because of some conditionalities around that. So probably something similar to that has to be created. And fourth is that northeast area and the underdeveloped area, probably they should look as a separate.
Now, the government has also reshuffled key finance ministry portfolios ahead of the union budget. Now, Tuinkanta Pandey has been appointed the Secretary of the Revenue Department, and he will also continue to be the Finance Secretary. Now, Arunish Chawla has replaced Tuinkanta Pandey as Secretary of DIPAM and will also hold an additional charge as the Secretary of the Department of Public Enterprises. Some key bureaucratic changes taking place there at the North Block. Time for a short break. Up next, cues from the commodity side. Stay tuned. We'll be right back. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up?
Well, I'm looking at some bit of a profit taking that we've seen coming for the crude oil prices. Remember, yesterday was 77.5 of a price. Currently, we are trading with 1% of decline in the overnight market. Well, the strength in US dollar index really seems to be weighing on. And then the markets also are looking at Russian exports lowest since August 2023. But much would really depend on the US non-farm payroll data that comes in tomorrow. In the meanwhile, we also have seen gold trimming its gains after the FOMC minutes. The US officials have emphasized on cautious approach, and the future rate cuts will hinge on clear economic indicators, is what the minutes read out. And finally, the strength really has come back in case of copper prices, almost 2% of gains on this one, and we're trading at a 3-week highs when it comes to the Dr. Copper.
Manisha, thank you for that update there from the commodity space. But with that, it's a wrap on this edition of Power Breakfast. Bazaar Morning Call set you up for today's trade. From me and the team that put this show together, thank you so much for watching.